For more perspective on Groupon's plans to go public, let's bring in Greencrest Capital Senior Research Analyst A.B. Mendez. He joins us now from New York. A.B., certainly a lot of confusion surrounding the date here. What exactly can you tell us? What do you know about the timing of Groupon's IPO?
Well, hi, Emily. Thanks again for having me. I can't give you a point estimate of exactly what day Groupon is going to IPO. Certainly some of the confusion around their communications with the street, with regulators, in the purportedly internal memo that was leaked to the media, they did mention August numbers specifically. That's a no-no when the latest numbers in your filed S1 speak to June numbers. So we have to assume, based on the report, that they are going to get the IPO out, or that the roadshow is back on, that they have come to some resolution with the regulators in terms of how to remedy that situation. So more than likely, the earliest it'll get out is end of this year, November, December. If the SEC just said, okay, no need to update the S1 for the quote-unquote leaked information about August financials, then theoretically they could get out by the end of October. That's the least likely scenario.
A.B., what's causing the delay? I mean, is this about market volatility, or is this about issues with the SEC?
It could be about any or all of the above. Certainly, there's been some concerns around things that have been said by the company, early-stage investors, you name it, that were not kosher with the SEC's regulation on what you do and don't say during a quiet period. So there have been some issues there. That's probably part of it. That's probably not all of it. You saw Zynga's IPO get pushed recently. Facebook is choosing to go with different timing on their IPO also, a number of factors at play in all these situations, but certainly uncertainty in the market. Every company wants to sell stock when they can get the best possible price. Maybe that's not now. Maybe a couple of months later is a good thing.
Now, Bill Gurley of Benchmark Capital recently wrote quite an insightful post. He seems to think that delaying an IPO can have serious consequences. I want to read you a quote from his piece. He says, "If you are stepping up to the plate for an IPO, be ready, be prepared, and be committed to seeing it through. Don't submit an S1 if you don't plan to price. Waiting on file for extended periods of time can be catastrophic." Would you agree with that, A.B.? I mean, what are the risks with these kind of extended delays?
There's always a risk when you fail to have truly well-prepared and consistent communication with regulators and with the street. When that communication is not direct and very clear and concise, investors don't like that. Regulators don't like that. What investors do, but what I can tell you is that not all of these situations are the same. Every single one is a completely different animal. What investors do like is 2010 revenues grew by over 2,000%. Strong positive cash flow growing by over 250% in the first half of this year. Average revenue per paying customer going up by more than 50%, again, in the first half of this year. So there's appetite on the part of investors to social media and social commerce companies. You look at the valuations that the marketplace is on LinkedIn relative to their current revenues and EBITDA and cash flows. There's obvious demand. If you apply LinkedIn's multiple on this year's revenue to Groupon, it's worth $60 billion. If you apply next year's EBITDA multiple, it's worth $9 billion. So probably somewhere in between there. But it's not just a one-size-fits-all in terms of, your IPO slips by a month. It's not the end of the world necessarily.
Yeah, but A.B., it's a very different business, least of which because of all the payables mounting on the balance sheet that the investors are also going to be on the hook for. LinkedIn doesn't have anything like that. But let me ask you about those monthly numbers that were in that letter from CEO Mason. The August numbers are peculiar because it's a monthly metric that is nowhere to be found in the S1 filing. Do you think the company should have to give us monthly numbers going back over time so we can compare that and understand that in our models?
I wouldn't say so necessarily. I really, I can't speak to this. Only the SEC can speak to what's appropriate and necessary. But anybody that covers the company closely has a monthly model. You might not have the exact number for every month going back to October of 2008. I've got my monthly model. What they're disclosing is not wildly out of line with what I would expect. They're still growing strongly. They have some challenges. Some of the balance sheet issues that you mentioned, Groupon or coupon fatigue is a real phenomenon. But to date, they're strongly cash flow positive. And they're still growing, paying customers in all geographies except maybe China. But yes, sure, there are certainly some concerns, but no single one of them says to me that there's a significant problem with their IPO making it this year.
All right, thanks. A.B. Mendez, Senior Research Analyst at Greencrest Capital.